Welcome to the Roy Morgan Weekly Update. Today we're looking at mortgage stress, up again in May. Politics, confidence, inflation and wealth, and the latest voting data from New Zealand, which suggests the Maori Party may hold the balance of power from the next election. But firstly today we look at the pressing issue for many Australians of mortgage stress. Roy Morgan's the only company that measures mortgage stress every month, and the latest Roy Morgan figures are out for May 2023, and the news is not good. Over a quarter of all mortgage holders, 28.8%, are now at risk. This is the highest for over a decade, since September 2011. This figure equates to an estimated 1.43 million mortgage holders at risk of mortgage stress. In addition, and perhaps even more concerningly, nearly 1 in 5 mortgage holders are now extremely at risk. That's 19.3% of all mortgage holders. This figure is equivalent to 922,000 mortgage holders. Now these figures are concerning enough, but additional interest rate increases will lift these numbers dramatically. So Roy Morgan, as well as measuring mortgage stress, also forecasts the level of mortgage stress in the months ahead based on projected interest rate increases. If the Reserve Bank increases interest rates to 4.6% by August, this would increase the number of mortgage holders at risk of mortgage stress to over 1.5 million, 29.9% of all mortgage holders, and close to the record high of 35.6% reached during the global financial crisis almost 15 years ago. Back to Australia, the two-party preferred support for the government remains strong at 56%, although down slightly on a week ago, well ahead of the coalition on 44%, up 1%. Government confidence, whether people think the country's going in the right direction or the wrong direction, has improved slightly this week and is up 3 points to 86.5. Still, more Australians say the country's heading in the wrong direction at 49.5% than the right direction at 36%. But consumer confidence has not improved. As Australians continue to struggle, ANZ Roy Morgan consumer confidence was down 0.8 points to 74.1. That's before the Reserve Bank meeting on interest rates today. People paying off their homes continue to have the lowest consumer confidence at only 68.6. And renters' consumer confidence was down 1.3 points to 75.3, but consumer confidence was up for homeowners by 1.4 points to 79.3. Inflation expectations, these are unchanged at 5.9% this week, meaning of course that Australians now expect annual inflation to be about 5.9% over each of the next 2 years. Turning now to our neighbours across the ditch, New Zealand faces an election in mid-October and the Maori Party may well hold the balance of power. Labor Prime Minister Chris Hipkins versus National Party leader Christopher Luxon, and the gap is narrow. In June, support for a potential National Act NZ coalition is 45%, and just ahead of the governing Labor-Greens coalition on 40%, although neither has enough support to win a majority. A key factor is the growing level of support for minor parties, now at 15%, the highest in this term of Parliament. And support for other parties is led by the Maori Party, which surged to a record high of 7% in June. If this support holds up, the Maori Party can win as many as 9 seats in the Parliament and hold the balance of power, as we said earlier. No other minor party has more than 3% support, not enough to enter Parliament. And finally this week, a note about Roy Morgan's latest wealth report and the special end of financial year wealth webinar, looking in depth at trends on wealth since the pandemic period. Given all the talk about cost of living, inflation and recession, it may surprise some to know that Australia's net wealth has increased by 7 percentage points since March 2020, and that's after adjusting for inflation. This is largely driven by the value of owner-occupied homes. that value is up a massive 43.2% to almost $6 trillion. One of the big takeouts from the report is the disparity in wealth. Now half the population accounts for 95.4%, over 95% of the nation's wealth, and the other half of the population accounts for less than 5% of the nation's net wealth. The poorest decile, or that's the poorest 10% of the population, predominantly renters, is not only in net debt, but have gone backwards since 2020. Respected economist and market commentator Alan Kohler, who I interviewed as part of the Wealth webinar, has forecast that if Australia's official interest rates increase to 4.6% in the next few months, Australia will almost certainly enter recession later this year. So to learn more about the trends in Australia's wealth, click below this video to watch the webinar, or head to the Roy Morgan website to read the latest Wealth Report article. And that's a wrap for this week. Subscribe free to our Roy Morgan YouTube channel for all the latest in politics, economic and market research data and insights. Thanks for listening today, and I look forward to bringing you the latest next week. Take care, and we'll see you next Tuesday.